June 12th, 2026, the biggest IPO in stock market history just went live. $75 billion raised, a $1.75 trillion valuation, the most hyped stock debut since Apple. And you were told this one was different. This one was for regular people. Here's what actually happened. For years, SpaceX was locked behind a wall. Venture capital firms, institutional investors, people with $10 million minimum accounts at Goldman Sachs. That was the only way in. Then Elon Musk made a public promise. He said he wanted regular people, Tesla shareholders, everyday investors, to own a piece of SpaceX. The number that got everyone excited? 30% of the IPO would go to retail investors. That's 3 times the typical allocation. Most IPOs give retail investors 5 to 10%. SpaceX was promising 30. People lined up. Robinhood users, Fidelity accounts, SoFi customers. Millions of ordinary investors put in their orders, some requesting thousands of shares. The pitch was simple. Get in at $135, watch it go up, be part of history. Then the allocations came through. One investor requested 1,000 shares. He received 17. Across online forums, the same story repeated. People who asked for hundreds of shares got 1. People who asked for thousands got a handful. The 30% retail promise? It was a target, not a guarantee. The final allocation went where it always goes, to the biggest institutional players with the most buying power. Retail investors got the scraps. If you got allocated at $135, you were still in profit. The stock popped 67% in 3 days, hitting $225. But if you didn't get allocated, if you watched the rocket launch from the outside and then bought in on the open market after the hype, the math looked very different. Here is what SpaceX's own financial filings showed. The company lost $4.9 billion in 2025. Not a startup loss, a mature company burning cash at scale. The reason? SpaceX merged with xAI, Musk's artificial intelligence company, in February 2026. xAI burned $6.36 billion in operating losses on $12.7 billion in capital expenditure in 1 year alone. Starlink, the satellite internet business, is genuinely profitable. It generated $4.4 billion in operating profit last year. That's the real engine of this company. But xAI is erasing every dollar Starlink makes. There is one more number most analysts are not talking about. Right now, only 4% of SpaceX shares are available to trade. The remaining 96% is locked up. Existing shareholders, early employees, venture funds, insiders cannot sell until December 2026. When December arrives, that 96% unlocks. A massive wave of supply hits a market that bought in at peak hype prices. That is called a lockup expiry, and historically, it is one of the most predictable sources of downward pressure on any post-IPO stock. The stock peaked at $225. That was 3 days after the IPO. Today, June 22nd, SPCX trades at $165. That is a 27% drop from the peak in less than 2 weeks. The average person who bought on the open market, not at the IPO price, but after the hype started, paid somewhere around $181. They are now sitting on a loss. For the investors who got allocations at $135, the math is still positive, but for the millions who watched the rocket go up and then tried to buy in after, this is what the hidden markup looks like. The price of being late to information everyone else already had. Is SpaceX a bad company? No. Starlink is one of the most interesting businesses built in the last decade. The long-term story, satellite internet, Starship, Mars, has genuine merit. The problem is not the company. The problem is the entry price. At $165 and roughly 90 times trailing sales, SpaceX is pricing in a future that requires xAI to become profitable, Starship to become commercial, and Starlink to grow to a scale never achieved by any satellite business in history. All 3 things need to happen for the current price to make sense. Morningstar's fair value estimate, $63 per share. Goldman Sachs projects potential upside to multiples of current prices. The gap between $63 and Goldman's bull case is not analysis. It is a confession that nobody actually knows what this company is worth yet. 3 things to know before you decide what to do. First, if you did not get an IPO allocation and you are thinking about buying now, understand what you are actually buying. You are not buying SpaceX. You are buying a bet on XAI becoming profitable, on Starship succeeding commercially, and on a stock that still has 96% of its shares locked up until December. That is a speculative position, not a value investment. Second, if you did get allocated at 135, you are still in profit. The question is whether you believe in the long-term story enough to hold through what December may bring. Third, the pattern here is not new. Every major IPO in history has followed the same arc. Hype drives price up, reality slowly pulls it toward fundamentals, and the investors who understood the business before they bought usually do better than the investors who bought because the rocket looked cool. The money markup exists for one reason: to show you the gap between the headline and the reality. This was the gap on SpaceX. Next week, we find the next one. Subscribe, and we will go through it together.